Hey everyone, I'm so excited about today's episode, but first want to let you know that this show is made possible by FortuneBuilders. I also want to take a minute to invite you guys to an amazing opportunity to learn from some of the top experts in the real estate industry about how to get started in real estate or scale an existing business to the next level. FortuneBuilders is hosting a one-day webinar to help you learn about real estate investing in today's market. So throughout the show, if you feel like you're ready to get started, go to FortuneBuildersShow.com to register. Again, that's FortuneBuildersShow.com to register. If you're watching on YouTube or Facebook, you'll find a link right below the show so you can get there that way as well. And please remember that the content of this show and every show is for educational purposes only. Myself or our guests are not going to be providing any legal, financial, or professional advice. If we share specific results, they are attributed to an individual or a business, and we can't guarantee the results will happen for you. Those earnings or the income will match those figures. The bottom line is there's always risk when investing in real estate. You can make a lot of money or you can lose a lot of money, and it's hard work. But that doesn't mean we can't have fun doing it. So let's get into today's episode.
From a team that has $1 billion in real estate investment experience. A show to help you learn the strategies and systems it takes to get started investing in real estate. This is the Fortune Builders Real Estate Investing Show.
Hey everyone, welcome to this week's episode of the Fortune Builders Real Estate Investing Show. Jeff Rakowski here, excited for another great episode. I have an incredible guest, Mr. Pat Christy in the booth. I'll give him a formal introduction here in a moment. But as always, let's start it off with our word of the week. Word of the week this week is entitlements. And entitlements in the context that we are talking today, this is in the context of ground up commercial development, apartment buildings, office, you name it. And really to simplify it, you know me, I'm a simple guy. I like to think in simple terms here. And it's really the process of gaining city approval for a project. Obviously, in certain states, that could be very, very rigorous. In other states, still a little rigorous, but there's a long process that needs to happen with city approvals and all of that before you ever put a shovel in the ground and that project gets underway. So that's going to be a part of today's show. So you are now educated. You have a new word in your arsenal as it pertains to real estate. But let's get after it. Let's get into today's show. All right, as I said, I am joined here today with Mr. Patrick Christy. What's up, Patrick?
Morning.
How you doing, brother?
Doing great. Thanks for having me.
Good. Excited to have you in the booth. Patrick is, lots to say about Patrick. He is part of the Equity Street Capital team that we talk a lot about here. This team has, I believe, just surpassed about $2 billion in assets under management. And Patrick's been in the, you go by Pat or Patrick? What do you
Either
prefer?
one.
I'm feeling Patrick for some reason.
That works.
All right, let's go with Patrick. Feeling Patrick. So he's been in the business for a long time. San Diego native here, and really, I guess oversees the entitlement process. Here in San Diego for Equity Street, and then very involved in the acquisitions process nationwide and asset management nationwide. He's also a father of two kids. You said 4 and 2.5.
4.5 and 2.
How do you have any time for real estate with kids that age?
My wife says this is when I get a break when I come to work. It's not as loud, let me just say that.
There you go. So you're on break right now. I like that, man. I like that. Well, man, I'm excited about this topic. It's actually a topic that we've never really addressed, here on the podcast. Definitely a higher level project, a higher level topic as it pertains to development. So I'm excited. I'm excited actually to learn a lot. This is an area I have a lot of interest in and been studying a lot lately. But first off, before we get into that though, I always like everyone to hear, what did life look for you prior to real estate? What did you do? Where did you live? What were your interests? All of that. And how'd you end up in the real estate business?
See, before real estate, I was living another life. I was working in Washington, D.C.
D.C., wow.
Public policy, foreign policy, defense policy. living in really another world. It was all about following Capitol Hill, international developments, what was happening in the world. I used to say, like, the worse the news was, the more interesting my job was.
Really?
Because you never knew what would happen that day, and you have to put together something, and people wanted to know kind of what's happening and what we should do. So it involved a lot of kind of looking at these big issues, becoming a so-called expert in a short amount of time. And then producing kind of concrete deliverables so that you could advise someone on, well, this is what's happening, this is kind of options.
Sure.
So it was really about kind of taking a lot of different data points and compiling them into a digestible manner.
Interesting. So you'd be like advising the public or advising individuals on Capitol Hill?
We would put together kind of documents and backgrounds, 1, 2, 3 pages, really digestible. And it was kind of a free service so that we would provide them to the general public. Writers, staffers on Capitol Hill, the administration. The audience would change depending on the topic. But it was an exciting time. And Washington's a great city, full of energy. 4 seasons. Summer's not very fun just because of the humidity. As a San Diegan, I don't know what to do in humidity. But,
I hear you.
That wasn't fun.
Yeah, I'm an East Coaster myself, Connecticut originally, so I missed the 4 seasons occasionally, but it's hard to beat San Diego.
It's hard to beat,
as you know.
It's hard to beat. But
wow.
So yeah, Washington was really fun, but I was looking for kind of a change in lifestyle. Eventually, wanted to come back to California. So went to graduate school out in Los Angeles for 2 years, and I was working on a project. I never worked in real estate before. I was working on a project. But a 6-month project, a semester-long project on real estate, which I was kind of assigned to. And reached out to an alumni, and the alumni kind of brought me in, introduced me to the team, and that kind of really got me in the door of a real estate company. So when I graduated, was offered a job, moved up to the Bay Area, and joined a great owner, operator, developer that has assets mostly in California. And worked on the entitlement side, got to see the process, buying up pieces of land, working with the city and the public to kind of create a concept, get that approved in the city, and then ground up development on the construction side.
Amazing.
So it was a great experience. Really happy for that opportunity, but really wanted to come back down to San Diego. Equity Street's a great company. And very excited to be here.
Amazing, man. Amazing. Well, so you cut your teeth on entitlements, man. That's a big. I got started wholesaling, signing contracts. So that's a big difference. But let's kind of walk through that property, or walk through that process. We have a ton of students in our community that always express interest in development. On the residential side, as you know, CT Homes does a fair amount here in San Diego as well, and Equity Street is doing a lot of great things there. But so you identify a piece of land. I would say that would probably be step one, right? You identify, or I guess probably the market would come into play first. Like walk us through what would be step 1, step 2, step 3, and taking a raw piece of land to the point where you can start building.
It can be, depending on where you are, city, state. It can be very different, and the time frame can change dramatically. Here in California, in a number of cities, it is a very long process.
It is. That's for sure.
It can start with kind of the pre-acquisition due diligence time. So we can look at a property here in San Diego and say, right now, it's a single-family home, or it's with a large backyard, so it's a pretty, 1/4 of an acre. It's a large size. But it's right near a transit station, a new trolley station that just popped up. Well, the first thing we'd look at is the zoning. What is it currently zoned? Well, there's been a lot of changes. We have huge housing shortages in California.
We sure do.
And some cities, not all, but some cities are trying to encourage more development on the housing side, residential side. So maybe the zoning has changed. So keeping up with, one of the things that I try to do is keep up with what is happening in City Hall. There's a lot going on in terms of rezoning, sometimes upzoning, increasing the density of an area. So this land, it was single family for 40 years. It was a single home with a very large backyard. A trolley station was just built across the street. Maybe they've changed the zoning, and so it's something for us to look at, because there's other opportunities for that land. And the city would say that, well, nowadays, instead of one single family home, maybe you can build a 3-story residential apartment building, and you can fit 18 units on that land. And so kind of keeping track with that, and then before we buy something, double checking and seeing what that zoning is, so we can get a better understanding of, well, is this the maximum utilization for this land? Yeah. And so that's kind of part number one, which is the due diligence acquisition time.
Yeah. Let me jump in there for a second. This is right, man. I could tell this is gonna be some incredible stuff here, and that's something actually we advise for those of you listening today is when you get started in real estate, one of the first things on your checklist is get yourself a zoning map of the areas you're going to be investing in, and like Patrick just said, stay up to date on those zoning laws, just because a lot of times you could put yourself at a disadvantage if for instance here in Pacific Beach where we currently are. There's these 1,200 square foot homes, that a lot, if you look through the lens of fixing and flipping, maybe you pay 1.2, 1.3. But for instance, just the other day, there's one under contract for 1.9. And I talked to the agent, I'm like, wow, that's really high. And he said, well, actually you can knock it down and build 6 units on it. Right. So things like that. So if you're not really understanding how to maximize every piece of land and what the maximum potential is, you could be getting outbid on a lot of stuff. Would you agree with that?
Absolutely. And to that point, sometimes it'll help explain why a price is what it is. And that's a great example. 1.9 suddenly, when you're seeing it's an outlier. 1.3, 1.2, 1.9 suddenly is a different ball game, and you might not understand. You're going to miss out on the bid there because you're not sure kind of why that price is what it is.
Absolutely. So you identify a piece of land, you understand, what that maximum potential is, and then you pull the trigger, you lock up the land, you make a decision. I'm going to build, 6 new homes. I'm going to build a 250 unit apartment building, whatever it is. What do we do next?
The design process can be pretty substantial. So finding an architect, civil engineer to understand kind of what you can build. What are the full dimensions?
Sure.
And once you start in that process, you'll also start working with the city. A lot of the cities, you can set up initial consultations, right? A 15-minute conversation just to say, look, this is what my idea is.
Yeah.
Here's kind of
building department, zoning department, typically combination of the two.
Exactly. Yeah, the planning development, which is kind of like the initial high level. So the idea is to just talk very high level. My math is telling me I think I can build 6 apartment units here.
Sure.
Is that what the city is seeing? And they can tell you, yeah, that's, the zoning currently says you can do this. You might have to remember this. Yeah. You're not getting into the detail of kind of building construction.
Sure.
Every little rule, but it's more the high level. And cities, I think, are very helpful in terms of that information. Yeah. So that's kind of the initial consultation.
Sure. And at that point, maybe, maybe they say, they look at it and they say, okay, this is zoned for X, Y, Z. And as a matter of right, you can do this here.
Exactly.
And, but how do you make the decision? Let's just say it's not a matter of right, and there would need a variance or something required, to maybe potentially apply to get it rezoned. What's the thought process there at that point?
It can change depending on the type of project you're looking at, because zoning change, a variance can be a time-consuming process and expensive process.
Sure.
And one of the things I think you generally don't want to take a big risk in terms of banking on a change in zoning.
Yeah.
Because some places are just not very accepting of changes. It could be the neighborhood around you that could cause an uproar that says people might not want very high density because you have single-family homes around you. So I always think it's helpful to kind of do some homework if you are anticipating a change in use of any type, to really understand kind of, has anything like that been done in the last year or two around there?
Sure.
Precedence is important.
Yeah.
Just because you can get an idea, right? You can track projects around you. You can see what was built. You can understand, was there a planning commission hearing right before you if you have to go to city council, a lot of it's public information.
Yeah.
You can go and you can see kind of what was discussed. What did the public report say? Was there an environmental assessment? What were the challenges? So depending on the size of your project, you might want to do some of that kind of background due diligence just to really understand what type of risk am I taking? Am I willing to take?
Sure.
Because sometimes some deviations, maybe it's a setback in the backyard.
Yeah.
Sometimes if you can get around that almost by right if you do certain other things. Mm-hmm. And so kind of just understanding that is really helpful to the process, I'd say.
Yeah, I actually learned that lesson the hard way years ago. My first development project, it was 3 parcels that we kind of pieced together and bought a little bit from this neighbor, a little bit that neighbor, and the goal was to build 6 single family homes, and we were short literally like this. It was like a 2x2 square foot of land that only allowed us now 5 houses instead of 6.
Wow.
And definitely made the project a little less lucrative.
Yes.
We had to go in for a variance, and we're denied the variance, because of neighbors rally around the fact that they didn't want, that much density in that area. So I guess the conservative approach is when you're looking at something, with those of you out there listening, you're looking at, a 1 family to a 2 family, or 1 family to 6 family, or apartment building. Ideally, we want to go in as a matter of right. Where we're just doing what the land is currently set up to do and allows, and then understand if we're going for something different, a zone change, then we're taking a big risk. Excellent. So the in your previous employer up in the Bay Area, and then Equity Street, is their mindset that we're going in for a matter of right and we're not trying to rezone, or what is the appetite there?
The appetite varies based on, I think, project potential.
Sure.
And some cities have changed rules over time so that some variations are possible. California has it because of obviously our housing shortage, has what they call a density bonus. So if you're building, let's say 20 units, and you set aside 4 units as quote unquote affordable housing,
right,
they will allow you, if you do that by right, 2 deviations, let's say, certain deviations from the building code. And that allows some flexibility in terms of kind of what you can build.
Sure.
You're putting aside certain number of units at a certain cost. In exchange, they will allow you to, let's say, the setback can change. Or like if you were 2 feet, right, there was a 2-foot challenge in that development you talked about. Maybe they will allow you to kind of get around that by changing something else. And so some cities are willing to work with you. In terms of rezoning is it's a more complicated process.
Yeah.
Right? It generally has to go from your kind of local community group to a planning commission, all the way up to city council.
Right.
So that's time, obviously, time and money that it takes.
Sure.
But it's something that can be doable. And sometimes, look, some cities might have already changed the zoning.
Right.
So whereas something was 1-story retail, maybe that is now mixed-use zoning. And so you are seeing in certain areas, high-traffic areas, that zoning is already changing in a lot of cities.
How does the average investor, just across the country, how do they become like one of the first people to know when a rezoning occurs? How do you really stay in the know and get ahead of that?
I'd say that local planning groups and signing up for those email lists, checking with the city planning departments as well. They're very good about, I think, here in San Diego, you can sign up, and I receive 15 emails a day almost just from the city in terms of notices on potential projects or potential hearings, but also planning groups that are looking at changing zonings or rezoning certain areas.
Sure.
You can attend those meetings in person. Sometimes they're online. And that's, if you can put that time in, obviously it's time intensive sometimes.
Sure.
But just to kind of follow that and see if there's a draft proposal. That's a great way to understand.
Yeah, that's huge. If we had something called the tip of the day on the show, that would be it right there, folks, is just, sign up for those local planning committees. Is we, get on those email lists. Just having that information before your competition is just invaluable. So that's a huge tip there. What would you say? To the person, and this is getting into the area of, I guess, a little bit of your opinion. Nobody has a crystal ball, but when we're talking about the entitlement process and getting ready to develop, we're talking longer periods of time. Just on like a 1 to a 6, for instance, start to finish. What do you think your ballpark? What do you think you're looking at there till you put a shovel in the ground or tear down the existing structure?
It can take a year to 2 years. Right here in San Diego right now. in terms of getting kind of a residential project approved.
Sure.
I'd say it's a minimum year period, but it's generally closer to the 2-year period.
So what do you say to the person that, man, you know, a recession's coming, real estate's a big bubble, it's gonna pop, you know, you'd be crazy to lock something up, you know, that you can't, you know, you don't know where the world and the market's going to be in 2 years. What are your thoughts around that? That's a big topic of discussion right now, as you know, just all across the country.
I think one of the benefits of the entitlement process is when you go in, you know that it's not, the upside isn't going to happen overnight.
Sure.
And so it is a process. So if there is an economic slowdown, sometimes this allows you to kind of overcome and because you know that you have to take some time to get it approved. Mm-hmm. It takes time to build something. Mm-hmm. You might outlast some type of a economic pullback in that circumstance. Yeah. And so you're looking at a longer term investment because of the process. And so it's going to take some time. If it's a bubble, if it's not a bubble, because of you're looking at 1-2 years plus construction, you're looking at a longer period of time that'll outlast, knock on wood, hopefully any type of slowdown that occurs. Yeah. So I think it's still a great opportunity if you can find, you know, the right value add or right value opportunity.
I agree too. And market selection is obviously a big, huge. We'll talk about that. We'll talk about that in a moment. But CT Home, I'm not sure if you're familiar with the Missouri Street deal that they sold recently, but that was actually a ground up development, just single family home. They purchased it in 2019. The goal was to, ARV was estimated, 2.1, 2.2, and took about 1.5 years, almost 2 years to get the approvals, almost a year to build that property, and it was sold to a YouTuber for about 3.9 million just a few weeks ago. He's got like 5 million followers talking about Nerf guns or something. A 24-year-old kid.
I'll sign my kids up to watch.
Right?
I love it.
But really, really interesting. But I want to talk a little bit about the market selection. But before we do, as always, guys, I know you have there's many people that listen to our show that you're thinking about getting into real estate, or maybe you've been dabbling in it, but really want to take it to the next level. And that is that's what we specialize in. To me, what we do best is help people go from where they are to, full-time in real estate, quicker and better than anybody I know. So we're running free trainings every single week. And right below this video, if you're watching on YouTube or Facebook, you'll see FortuneBuildersShow.com. That's FortuneBuildersShow.com. And of course, if you're listening on an audio platform right now, just type that URL, FortuneBuilders.com, into your search box there, and that'll get you a free ticket to one of our upcoming trainings. Typically, they're 2 hours to 5 hour trainings, depending on the one you choose, and that will get you on your way. It's actually where I started back in 2007, and man, one of the best decisions I ever make. So definitely take advantage of that if you're interested. So we talked a lot about entitlements and that process, and that's great. We never talked about this on that show, and I could definitely anticipate we're going to get a lot of follow-up questions and things like that, so we'll probably have you back on that topic in the future. But another part of your role for Equity Street specifically is acquiring properties nationwide, from retail shopping centers to office buildings to apartment buildings, and then maximizing, and managing those, and maximizing the potential of those properties. But where are you guys buying, and why are you buying there?
We've invested in a number of properties in the last year. The company's grown dramatically. The assets under management is pretty significant. Sure. We have seen a lot of deals in the Sun Belt area. Mm-hmm. So if you think about Southwest, all the way down through the South, Southeast, there's just a lot of opportunities. We were looking at a deal the other day, so we were doing some research on just demographic trends. And where's the population going? Obviously, COVID had a huge impact on where people are living. Yeah, so people are moving, changed dramatically, just in a 1-2 year period. And so looking at, I was looking at the Census Department, puts out their data, and over from 2020 to 2021, it looked like, I think, 8 of the top 10 growing counties in the country looked like Texas, and the Carolinas, and Florida. I mean, just dramatic population growth. Wow. And so that's always of interest, right? Those economies are doing quite well. People are moving to these states that are just very robust GDP-wise, economically growing, young populations. City of Austin, for example, has grown dramatically in 20 years, 10 years even. And so you have kind of these demographic shifts. People are moving to places, populations are growing, younger populations, jobs are changing, to different types of cities. And so those are just very, very interesting opportunities.
Amazing. I think Texas is number one, right, in growth right now.
I think it is.
Overall, last time I looked. And where do you guys track? I mean, just for, is there a public place, somebody could go to that's listening to the show to say, all right, where are the most people moving to? Where is the most growth? How are you guys tracking that?
So we, there's articles that come out all the time.
Sure.
I think certain markets that you see, but at the high level, I think the government data puts together kind of the most comprehensive information on that.
Yeah.
So the Commerce Department puts out numbers on where people are moving. So that's where I try to kind of get my full, to really understand. That's the best type of data source, I think.
Oh, there you go. I was actually on uhaul.com a couple weeks
great.
ago.
I've been looking at that too.
Yeah. That's a great little free tip for you guys as well. Just see where the most vans are going to, on an annual basis. That's really good. So the Sun Belt. How to get the name the Sun Belt? Do you know?
I think it's from the weather.
I would think so.
That would be my guess.
Yeah.
I think there's people that were living in some cold weather places that suddenly were moving to these areas. That get pretty hot in the summer and don't get too cold in the winter, I hope. And I think that's what triggered it.
Yeah, I asked because I was out in Ohio recently, and I was, the Rust Belt, and I had no idea where that name come from, and I guess it was because they used to be big in the manufacturing and factories, and that all moved out, and the buildings are rusting up. So just was curious. I was assuming weather, but just thought there may be something more to it. Interesting, but I guess not. It's just warm weather. Nothing wrong with that. So that one of the main drivers is where people are moving to, economic growth, population growth, and all of that. So now let's fast forward to, you have an asset under management, whether it's a retail center or whatever. What are you doing on a day-to-day basis to maximize the performance of that asset?
A lot of it goes into kind of our business plan and when we acquired an asset, what were the reasons? What was the upside opportunity?
Sure.
Should we invest $1 here to earn another $2 in the future? And so there's different things we look at. If you're looking at on the retail side, leasing, obviously.
Sure.
Leasing is huge. What are your current tenants?
Yeah.
What are they paying every month? Do you have availability coming online in the future? What does your rent roll look like? So over the next year, are any leases expiring? Or is there current availability? Is there a tenant in one place that could be maybe would be interested at the end of their lease in moving to another location on the property where you could earn, I think, higher returns with a different type of tenant?
Sure.
And so just trying to kind of balance those different areas, as we look at every month, every week, as we talk to our partners, on the field, in the ground, to really understand kind of how's an asset performing.
Sure.
You can look at the financials, but also really it's so much of it is lease driven.
Agreed.
Is there opportunity to sign a new tenant that would attract more customers? Because once customers come to your retail center, they're likely to go to other stores, which will overall increase revenue, and that's good news for everyone.
Exactly. We talk a lot about on this show, just value add investing. And that's what Patrick's referencing. Value add. How do you buy an asset? And I love your guys' approach, just because I guess on the entitlement side it's a little different, but for the most part, the majority of the assets that you guys purchase, they're making you money from day one, the day you close. And then you're just working on adding value, making it make more money for you, essentially. So I think one thing that would be helpful for the audience is, and you just kind of alluded to you addressed the top one on the retail side, but let's just talk maybe 3 or 4 top ways of adding value to a retail center, and then we'll hit office, then we'll hit we'll hit apartment. So leasing is going to apply to all 3 of those, of course. So I see a lot on the retail side. You guys factor in things like an out parcel sale. So talk to us about that.
There's a whole, I think, gambit in terms of opportunities. And if you're talking about on the retail side, right, selling an out parcel is a way to kind of quick cash return.
Sure.
I think. If you're talking about the overall property, there's certain upgrades that can go kind of across assets, right? So the overall look of a property, right? The lighting, the paint colors, right?
Yeah.
The more updated a place can look. The tenant mix is also huge,
Sure.
right? So there's certain types of tenants that just attract people consistently. Target people are willing to drive a further distance for Target or a Costco.
Walmart,
exactly.
Costco, yep.
These kind of super centers that now that hopefully COVID is kind of past us in a way, right? People are returning to shopping more, and that's where people like to go. There's different, whatever the need is, people like to go. You can add kind of experiential opportunities. Right. If there's a big plaza,
lifestyle type centers. Yeah.
Lifestyle is huge right now. There's certain things that you can't replace with online shopping. My family, we like to go camping.
Okay.
Right. We love the little boys running around, getting dirty, sleeping in a tent. We like to go and buy that stuff in person. You just don't know what something's going to feel like. I don't want to buy hiking shoes, online and then have to return them and go back and forth. I'd like to put them on and feel what they feel like, walk around in them. It's so true for so many different things. So that's the type of retail that people are still looking for. The experiential side is huge.
Sure.
Right? Anything that we can do to get people to our retail site. So if it's a monthly or weekly farmers market, once a month concert, pop-up venues, pop-up stores, whatever you can do to get people to that retail center. Yeah. Because then they'll spend time there and it'll become kind of a frequent opportunity that they search for, they like to do. And, those are certain things that you can do to kind of increase the appeal and bring people in, because once they're there, they'll spend money and that'll be beneficial to all the tenants involved.
There you go. What about office? What would you say? Obviously, leasing is probably number one there.
Leasing's
as well.
Huge, but it's also critical, right? The office space is changing, but it will always be here. People are going back to the office. I was excited to go back to work. Right. Kids aren't trying to climb on top of my head when I'm, on the computer. Yeah. But, people like the office is also changing and understanding how it's changing. Yeah. The younger workforce, tech companies, it's not just about going to a physical desk, right? Sometimes they change their desks. They don't have assigned desks, but they want more of the experience around it. They want to be able to, go downstairs, sit outside. Maybe there's food you can just walk to right nearby or at the complex. Yeah. A nice lobby space, good meeting spaces. People want these types of amenities. And so amenitizing, I think, those office spaces is huge. And that's what can really differentiate one unit from another at another complex. Yeah, totally agree. And let's cap it off with apartments. What would your thoughts be there in terms of forcing appreciation, adding value? I think there's a couple factors. One is just kind of unit quality and upgrading units. In San Diego, we have a lot of apartments that are 30, 40 years old and they just need some love. So what can you do? You can countertops, right? The kitchens are huge. A nice kitchen goes a long way on the leasing side. Carpets, hardwood floors, just overall renovation. So a 40-year-old apartment can look brand new. Sure. And there's not a huge cost, but there's a value add that can allow you to change the rent that you're receiving every month. And that's huge when you're talking about cash flow. The second part is amenities, right? You spend so much time on the weekends at your apartment complex. If you have the ability to add some amenities, that could be lawn chairs, that could be a barbecue area. People, you don't have your own backyard, but you can go down there, you can walk over, right? 4th of July, it's perfect, right? Setting up a barbecue space. If you have a pool area, making sure that pool kind of is clean, looks the right way. There's all types of things to make people feel more comfortable and separate yourself from the rest of the market. And that's really what the value add process does. Yeah, that's great advice, man. That's great advice. But we're definitely going to have to get you back on the show here. But let me get you out of here on this question. We have something on this show that we refer to as the fear factor. And I ask this question to every guest that comes on. And this is just because, I think the number one thing that holds people back in life from, living the life that they want to live or succeeding in real estate, succeeding in business, is fear. I deal with students all over the country, and they ask it in different ways, but it's kind of like, man, I'm afraid to step out and invest in real estate, or,
I'm comfortable with residential. I'm afraid to take that step into commercial. That seems so over my head, type of thing. So how do you deal with fear in your personal life, business, whatever? What do you have for us there?
Look, there's one thing I learned in high school Spanish class. My former teacher used to say, if it was easy, everyone would do it.
There you go.
And these decisions are hard, right? There's uncertainty. You don't know what the market's going to do tomorrow. You don't know what it's going to do in 1 month. But if it was easy, then everyone would do it, and everyone would make all the money they dreamed of. But it's difficult, and it's challenging. And I think for me personally, if there's a fear factor, it's always understanding kind of what is my tolerance for risk?
There you go.
What is my tolerance for a situation? Real estate it's a long-term investment, right? Mm-hmm. You're not buying frequently, not just going to buy something and then sell it the next day. So kind of understanding that time frame, and that will help alleviate any concerns you have. If you're unsure about where the market's going to go, the market could go down tomorrow. Real estate prices could drop tomorrow. It could go up the next day, or it could go up in a month. But if you look at the overall time frame, over time, real estate prices go up. That's historically what has happened. We'll see what happens, but that's what over time has shown us. Yeah. And so if you're looking at it that way, the kind of the macro picture still seems like a great way to make some money and make an investment, and just a great learning opportunity. And so understanding kind of what you're willing to do and what risk you're willing to take is kind of how I look at it.
Yeah, that's great advice, man. And for those of you just maybe you're thinking, man, a recession is imminent, a bubble could pop and things like that. We're actually having a little conversation before we went live on the air today, and one interesting statistic we're talking about is our country has had 6 recessions since 1980, 6 of them, and in 4 of them during the recession, real estate prices appreciated at an average of about 6%. There was one time in 1991 where they depreciated only by 1.9%, very minor. And then in 2008, which I believe was more of an anomaly, it was about almost a 20%, depreciation during that time period. But I don't believe the issues that existed in 2008, 2009, exist today. I think we're dealing with a different beast. So we're very bullish on. Would you agree with that? Just buying. Obviously it's got to check the boxes that we're looking for. It makes sense. But to me personally, I'm trying to get my hands on as much more real estate as fast as I can. What are your thoughts on that? And
look, I think it's what we were saying earlier, but it's everyone's bet kind of where the economy goes. Yeah. Maybe we've already seen some correction. Even what people thought a year ago were the best investment you could make, right? Tech stocks, but tech stocks have gone down dramatically in the last couple months. And so just kind of where the overall market is going, well, we know that rates are going to go up a bit more. Mm-hmm. I mean, the Fed has kind of talked about that. Sure. And so that's going to happen as long as that's kind of priced in. And it's really anyone's guess where the market goes. But over time, if you can extend that time frame, real estate is generally a good play, as you've mentioned. Yeah. And so
I agree.
As long as it's the right asset, the right opportunity, then
I agree. And I would add to that fixed debt for sure. That's one thing I just, I am trying to buy as much as I can right now personally, but I'm not interested right now in, debt that's going to fluctuate, with the market. Cause I do agree with you. I do think it's going to rise, man. But great stuff, man. We'll definitely get back here soon. Thanks for coming on. And thanks everyone for joining us. As always, definitely like the video, subscribe, do all of that stuff. It just helps us fulfill our mission of reaching more people with financial education. We'll see you next week on the Fortune Builders Real Estate Investing Show. Take care.